Let's be honest, running a limited company sometimes feels like playing Monopoly with His Majesty's Revenue and Customs. Except they wrote all the rules, change them every few months, and still fine you for doing things wrong. But here's the good news. There are ways to take money out of your business without getting slaughtered on tax. You just need to know where to look. So in this video, I'm going to walk you through 15 completely legal, tax-efficient ways to extract money from your limited company without triggering a visit from the taxman or accidentally buying yourself a one-way ticket to the 45% tax band. Whether you're a solo director or you've got staff and growing, there's something in here for you. So grab a cuppa, let's get into it. Hi, I'm Alifa, Chartered Financial Advisor here in the UK, and let's just jump straight in. Number 1, Director's Loan Account. Borrowing without the tax hit, if you're quick. You can borrow money from your company without paying tax as long as it's repaid within 9 months of your accounting year end. But miss the deadline and bang, you're hit with a tax charge. It's a handy short-term option, but not a long-term freebie. Number 2, interest on loans you've made. So if you've put your own money into the company, maybe for equipment or cash flow, you can charge interest. The company deducts it and you can earn up to £1,000 interest tax-free if you're a basic rate taxpayer. Just set a fair rate and draft a loan agreement. Number 3, the dividend salary combo. Still great when it's done right. A modest salary around £12,500 plus dividends to fill up your basic rate band is usually the sweet spot. Dividends are taxed at just 8.75% in the basic band, far better than 20% or more in income tax. It's not as straightforward as it once was, but it's still one of the smartest extraction methods going. If you pay yourself a salary of £12,570, which uses the personal allowance, no income tax and no national insurance contributions are due, because you're under the threshold. Then you can take dividends up to the rest of the basic rate band, which for the 2025-26 tax year is £50,270. That means you can take £37,700 in dividends, the first 500 of which is tax-free thanks to the dividend allowance, and the rest, £37,200, is taxed at just 8.75%. So you've taken £50,270 total from your company and you've only paid £3,255 in tax. That's an effective rate of 6.48%. Number 4, dividend splitting with your spouse or partner. If your spouse isn't fully using their personal allowance, you can transfer shares and pay them dividends. Their allowance plus dividend allowance means you could shift over £13,000 tax-free. Just make sure it's a real share transfer and logged with Companies House. If your spouse has no income or dividend earnings, that means you could essentially double up on our last example, and as a household extract £100,540 and pay just £6,510 in tax. Number 5, employer pension contributions. Your company can contribute up to £60,000 per year into your pension with no income tax and no national insurance contributions due. It also counts as a business expense, reducing your corporation tax, and it gives you a retirement fund growing tax-free in the background. Maximising this allowance means you could individually extract £110,270 or as a couple extract £220,540 from your business and still have paid no more tax. That's an effective tax rate of just 2.95%. Number 6, Alphabet shares. Want to pay different dividends to different shareholders? Alphabet shares are the answer. By creating different share classes, so A shares, B shares, C shares, etc., you can decide who gets what and when. And this is perfect for managing family income, business partners, or tax planning. Number 7, trivial benefits. You can give yourself and your team up to £50 per benefit up to 6 times a year. So that's £300 max for directors. There's no tax, no reporting, just don't give cash or link it to performance. So think gift cards, wine, or an overpriced candle if that's your thing. Number 8, annual staff functions. You can spend up to £150 per person each year on staff events, tax-free for employees and deductible from the company. And yes, even if you're the only staff member, just keep it under the limit and open to all employees. Number 9, relocation expenses. So if you've moved house because of your job, your company can pay up to £8,000 of your costs tax-free. This includes removals, estate agent fees, legal costs and temporary accommodation. Just be sure the move meets HMRC's criteria and happens within 12 months of starting your new work. Number 10, salary sacrifice. You give up a bit of your salary in exchange for benefits, pensions, electric vehicles, childcare, even private medical if structured right. You save tax and national insurance contributions, and your company saves on employer national insurance contributions. Just be aware it might affect things like mortgage applications, so don't jump in blindly. Number 11, claiming mileage. Use your personal car for business. You can claim 45p per mile for the first 10,000 miles and 25p after that, tax-free. Just make sure you log your journeys properly and reclaim what's yours each year. Number 12, selling personal assets to the company. So if you've bought a laptop, desk or camera personally that you now use within the business, sell it to the company at fair market value. You get cash, potentially tax-free, and the company gets deductible assets. Number 13, employer-funded training. Need to level up your skills? Your company can pay for training related to your current role, and it's fully tax deductible. That AI course, finance training, or software bootcamp, all fair game. Just keep the receipts and make sure it's for the business, not your side hustle and yoga teaching. Number 14, business asset disposal relief, the big one for business sales. So thinking of selling your business, business asset disposal relief could mean paying just 10% capital gains tax on the first 1 million in gains. This used to be called entrepreneur's relief. It's still just as valuable, but you need to meet the conditions. Own 5% of shares and voting rights, be a director or employee, and hold those shares for 2 years or more. Plan early, it's a chunky saving when you exit. And number 15, using your home as an office. You may claim a flat rate home office allowance without records. Alternatively, you can either apportion actual household expenses pro rata to business use, or set up a formal rental agreement treating your home office as a separate commercial arrangement. Both are accepted methods, though care is needed around capital gains tax and proof of business use. And there you have it. 15 clever, completely legal ways to take money out of your business without handing half of it to HMRC. The main thing is this: you've earned it, you built your company, and you took the risk. And you deserve to enjoy the rewards without feeling like you're being mugged by the taxman. If this helped, do me a favour, give the video a thumbs up so YouTube knows it was worth your time. Hit subscribe for more financial education. And remember, the goal isn't to dodge tax, it's to stop overpaying it. Thanks for watching, and I'll see you on the next one.